You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And welcome to another episode of A Smarter Way Home. Home buying and mortgage strategies for consumers and real estate professionals alike. My name is Victor Bals. I am your host, and I am here with my wonderful co-host, the loan officer extraordinaire, Mrs. Danielle Boote. How are we today?
I'm doing fabulous, Vic. How are you?
I'm doing pretty good here. Got up nice and early here for the show, and we got an exciting show today. And we're going to talk about home building or the lack of home building. And we've got a very special guest with us today, Danielle. Who do we got?
Absolutely. It is my pleasure to introduce Bob Filka. He is a Muskegon native and a Hope College graduate. Bob has served as the CEO of the Home Builders Association of Michigan since 2006. Bob has more than 30 years of government and policy experience in both Washington, D.C. and Lansing. Early in his career, he was a legislative aide to the late Grand Rapids area Congressman Paul Henry. Upon returning to Michigan, he served as a policy advisor to Governor John Engler. He was appointed by Engler as the president of the Michigan Strategic Fund and became part of the original executive leadership group that created the Michigan Economic Development Corporation. Prior to joining the HBA of Michigan, he served as Chief Operating Officer of the Michigan Broadband Development Authority. Bob has numerous organizations that he has served over the years, including chairman of the Habitat of Humanity of Michigan Board of Directors and the Michigan Virtual University, among others. So it's our pleasure to have you on, Bob. We had the pleasure of meeting you a couple of months ago when you came to Livingston County and spoke to the Association of Realtors. We were really intrigued with the conversation and all the data that you brought. So when Vic and I talked about it, we're like, we got to try to get Bob on our podcast because it's such a relevant topic. And so many of the things that you discussed are not in the day-to-day news.
Yeah.
And everybody talks about housing going, what's the problem? Why are prices going up the way they are? Why is there such a shortage of housing? And, where are we going to be in a year or two or 5 years from now?
Well, it's a pleasure to be with you guys today. And yeah, I believe at the time I was talking about, we had just released a report showing that Michigan had a 40% increase in new home building activity across the state over 2020. But then I paraphrase that by saying, but that was 2020 and that was the start of COVID and we were shut down as an industry for 2 months. And so comparing those probably wasn't fair. But I said, looking back even to 2019, we're up over 20% versus 2019. And while many people would think that, hey, that's a huge increase and there's going to be a lot more available homes across the state. And I pointed out that historically, Michigan has gone through so many transformations in its home building industry that we are at a critical shortage of production capacity, and the capacity that's there because of the market dynamics has all been concentrated at building larger, more expensive homes, even for renovations at the high end of the market. So the availability of new housing stock in that for the typical Michigander has not been built essentially for a decade. Now I'm speaking at a 30,000 foot level, but a state the size of Michigan should really be building, economists will tell you, about 25 to maybe 30,000 homes a year. With that 20%.
In what price range, Bob? What are we looking at here?
Well, and typically that would be across the board. So you'd have an equal mix of starter homes and multifamily and larger single family homes. It would be a good mix. Today, we're only, even though we're having a 20% increase, we're only going to probably build about 17,000 homes in Michigan this year. So while we have a 20% increase over the last year that we can really fairly measure, the reality is we're still 8 to 15,000 homes a year below what is needed in our state. And then if we've been doing that for more than a decade, and actually back when the housing crash occurred back in, '09, 2010 and so forth, we dropped down to 4 or 5,000 homes a year back then. So when you add that all up, we're about 150,000 to maybe 200,000 units below where we should be for a state our size in terms of available new units. With the aging housing stock that we have, we should be building 25 to 30,000 homes a year, and of all types. Now, as I mentioned, the median home, I think at that event, the median home price for a newly constructed home across the state is, now we don't have hard data yet, but it is approaching $400,000. So if the typical home, single family home being built in Michigan is above 400, and in many markets it's actually in excess of a half a million or more, the typical, you know, entry level home that, I'd like my adult children to be able to buy, and I'm sure a lot of people who have family are experiencing this. There's just not the availability of stock in those housing price ranges, and we're losing a whole generation of customers for you guys and for our home builders that aren't able to build equity because they're paying exorbitant rent prices because of the shortage.
Well, and
And
then, but also with that home shortage, again, it's going to be a double whammy because that's going to make existing home prices continue to rise, thus dampening the home buying experience for the first timers.
Absolutely. And as I tell people, if you're, I was fortunate to be able to use the first time, the FHA, first time home buyer loan back, 30 plus years ago.
At
And
10%.
yeah, it was at 10% actually, but I only had to put 5% down, and I wasn't competing against anybody. I mean, I think today sellers are in a situation, and you can't blame them, where they're going to take the cash deal or they're going to take the conventional lending deal. If they're going to be advised that, that's a nice young family, but they've got to go through the VA lending process, and that's going to take time and inspections. And so the reality is, people trying to buy for the first time right now are at a huge competitive disadvantage in the marketplace, and we're losing a whole generation. And since there's a lack of supply of homes, what a lot of people have been doing more recently, and we all often personalize it, but I'm an example myself. We bought a house, a couple $100,000 house. We're going to put a couple $100,000 into it. And that house, the house that my family we purchased, would normally go to probably a starter home for a young couple or something. And I think that's happening all across the state. And and since nobody is building in that 200, 250, $300,000 price range very much anymore, and again, I'm speaking at a high level because you do have pockets of that activity. There's just such a lack of available housing stock, that we are at a crisis. I mean, you go to different parts of the state, well, and even over in your area, you've got buses bringing people in from Flint and other parts of the state to work in Livingston County because there's no available housing stock in the price range that people are making $25, $30 an hour even. They can't afford to live where they work. And we're seeing that all over the state. Up in the Traverse City, I'm heading up to Traverse City today. Up in that region, they did a recent survey. I think the average commute time for a worker in the hospitality sector up in that northwest corner of the state is approaching an hour each way.
Mhm.
And so, when you're, so we have workforce issues as it is, and compounding that is the lack of housing. And as people have to travel and commute further and further in order to get to attainability, affordability, it's really a bad thing for our state economically. As you were reading my bio, I've done a lot of work in economic development. housing has become one of the top economic development issues for our state and for many states, actually. So if we can modify some policies in our state, one of the things our association is doing, and we've got several bills that have passed the Senate and are in the House, hopefully on the way to the governor early next year, that would create some new financing tools and stuff for local communities to try and attract housing investment that they need. Because today, there is limited capacity. There's lots of demand for housing, like I said, at the high end of the market. In order to get that production capacity focused on those lower cost housing properties, communities are actually going to have to do what they've done to try and attract jobs to their region. They're going to have to provide some incentives. They're going to have to lower the regulatory burden. They're going to have to perhaps help finance infrastructure to get that investment and to be able to get that builder and developer to offer those homes or townhomes at price points that the community can afford. From a pure market standpoint, though, most builders today around the state will tell you it's impossible to make money below, particularly for single family homes, below that $300,000 level. They just can't. And actually, some would say that number is now 350 or more,
Now,
given the high cost of housing.
is that because of cost of material and labor or regulatory?
It's all of the above, and that is and as I've told folks, I represent a pretty conservative business group, right? I mean, small business owners are generally pretty conservative. They don't want government involved in things. But when they're saying the market is dysfunctional and the government needs to do something, we have a major crisis and dysfunction in the marketplace, and it's really telling. I mean, we have a shortage of workers. We have a shortage of lots, so lot availability. And lot availability is really driven by that local regulatory review process. Not far from you in a little town that's everybody's excited about a big game that's going to happen at the end of December. It took over 4 years to get a development approved. From the point that a builder and developer had acquired all the land in that community, it took 4 years. And for a community like that with a major university, the builder and developer could afford to wait. But in many communities across the state, if they have that kind of process to approve new developments, builders and developers aren't going to come. They're not going to go there. They have plenty of other customers with 10-acre lots that want to build a $500,000 or more home. And so communities need to think differently. We really need to be thinking in partnerships. And that's one of the things that we've been working on across the state, is to try and encourage communities and economic developers and builders and developers to start working together to come up with the financing strategies and so forth to make the math work, so they could actually build a development of, say, townhomes or smaller single family homes that are at those price points that the average Michigander can afford. And it's going to take some work in order to do that. And I think communities that recognize that and start looking to change their policies to attract that kind of investment are going to have an advantage in our state. And so, I mean, and you're fortunate in the Livingston area. I mean, I would actually say the building departments and the inspection folks and stuff are all very good to work with. I think in your area, some of the other problems are certainly building material costs, land costs, other types of challenges that make it very difficult to build at the $250,000, say $300,000 price point.
Well, I think in Livingston County, one of the issues that we have is infrastructure, right? We have land, but if we don't have natural gas or a broadband internet, they're not going to build a neighborhood. And, propane's not cheap, and it's not necessarily the highest and best if you're going to do a development. One of the things that I heard, Bob, and I'm not sure if you're aware of this or not, but you might be. So back in the recession of 2008, we saw a lot of developers go bankrupt. Banks took the developments back. But what I have heard in several occasions, that there have been a few municipalities in Livingston County that actually bought up the tracts of land that builders had developed. So in some cases, there's streets in, They just never built homes. And now these townships are starting to try to sell some of this land. I think what happened is they bought it at the state tax sale or something of
Sure.
that nature. Are you still seeing that? Are you still seeing vacant land that's undeveloped in pockets of the state that the municipalities own and haven't released yet?
Um, a very small segment, and I think also if the government owns it locally, I think a lot of and they maybe their land bank is managing it. There's been kind of a I think there's an assumption by many builders and developers that land owned by a governmental land bank might be substandard or so forth. So we've actually been doing a lot of work with our state land bank to try and educate members to recognize that actually there is some valuable property to develop that many local governments do own. But I don't see the larger developments. Many of those a more significant problem for those developments that went under during the crash. Many of them were purchased by higher volume builder developer companies, and the only builder that's allowed in those developments is the builder developer who bought that property. Back, Michigan prior to the crash, the many in many areas of the state, the model was that you had a developer. The developer developed the land, put in the infrastructure, and then made lots available to any builder that wanted to come in and build in that community. That's changed dramatically. So the smaller custom builders that actually dominate our state have a harder time finding lots. And so what has happened is many of those builders have shifted to, the 10-acre one, single family a customer who has already gotten their land, and typically in more rural areas, they have a 10-acre type of density limit. That density is actually an issue in your area too, in some pockets around Livingston, where local township policies, they may have developed a policy decades ago that limited the requirement for a home, that you couldn't build a home on a property unless it had at least 10 acres. And some of those rules are archaic. Some are intended to prevent, smaller homes and more population growth. But I think the reality is those policies need to be updated and changed in many areas of the state. That is an issue, probably more so than the government holding on to that property. I think many of the properties have been developed that went under back in 08, like you mentioned.
I want to, Danielle brought up a really good point. Let's talk about the crash there when all the land and all these housing developments went back to the bank. Well, that entailed now bank financing for builders is very, I guess, let's call it limited, because, our community has there's a few big builders out there that have their own bankrolls, but we have a lot of small businessmen that, they build a few homes a year. And a lot of these don't have the bankroll and there's no spec money out there in the banks for these builders to build spec homes. And so they're requiring their borrowers to get a construction loan. And a lot of these first-time home buyers don't meet the criteria for a construction loan, which is very limited. And so the financing becomes very difficult again. I mean, there are construction loans out there, but they're pretty tight guidelines. And so the first timers are, again, a double whammy because there's no financing for our smaller builders. What are they going to do?
Yeah, no, I agree. It is a huge challenge. Well, what they have done is they've gone to the cash customer, right? That's why most of the homes being built are for couples building a move up home, and they've got equity, they've got cash that they can bring to bear. Yeah, some bankers I've talked to, on construction loans, they're requiring an additional reserve. So not only do you have the old 80-20 rule, but you may have to also put, several thousand, 20, tens of thousands of dollars aside in a reserve account to protect for material price increases, right? So we've seen, again, I'd go back to my earlier comment that a first-time home buyer, or even somebody looking to build new now, that could do it technically financially, but given the marketplace and the dynamics of price spikes are at a disadvantage and can't really do it. And so we're only building the uh, those high end homes. And even in the renovation sector, you may have we have a ton of old housing stock that could be brought up to a level where more people could buy. But the problem is all the remodelers are tied up in high end projects and aren't really working on those smaller types of units that could, with maybe $50,000 or more of renovation, could be brought up to a scale where that first time home buyer could actually purchase those homes. There's not the capacity to do that. And in fact, with all this federal money coming through, there's a bunch of money going to be targeted towards housing. And one of the discussions I've been having with our state housing development authority is who's going to build it? Who's going to renovate it? Yeah, there may be hundreds of millions of dollars directed at renovation of dilapidated housing in our state, but the capacity to do that when there's such high demand for high end renovations in their marketplace, which typically provide a better margin, why would they shift gears and work on a bunch of 1950 or older types of homes in our more urban areas to bring them up to a new level? Why would they shift gears and do that? So I'm concerned for our state and in terms of the capacity of production, both for new construction and for renovation, quite frankly.
Well, you talked of the capacity meaning the workforce, and you brought up a note before the show here about the average age of the average plumber. Talk about the workforce and the amount of people that we're lacking in this industry.
That is the biggest cause of delays right now, particularly as subcontracts, right? The typical builder, many people don't realize the average builder will use over 20 subcontractors to build a house. So it's the plumbers, it's the electricians, it's roofers, it runs the gamut. And waiting for that subcontractor to be able to come to them, it's become a harder and harder problem. I mean, the average time to build a house now in Michigan, it's taking more than a year. It should take 5, 6 months. So it's double the time. And in many instances, it's taken even longer than that. Workforce is an interesting challenge. Many of the schools, if we go back a decade, they had dropped all of their construction types of learning programs, and everyone had to go to college. Now that environment is changing. The good thing is many of the CTE programs around the state are back, but they're at capacity, and they have limited capacity for students because they don't have enough teachers to teach some of those trade types of courses. And as I said, I think at the event that I spoke at before, if our industry used to have more than 30% of an immigrant population serve the industry. Today, that number is in single digits. And if we don't modify our immigration policy at the federal level to let more people in with lower skills to do more labor intensive types of jobs that are there for the construction sector, we're never going to solve our workforce problem in our country, because too many people are, and that's a good thing. I mean, many people are going to college but they're on a different track, and the numbers just don't compute because the number of students in those CTE programs, some of them may go to commercial construction, some of them may go to road construction. So those that end up going into the trades that serve residential construction are very, very limited. So it's long term, it's something important that we need to continue to work on to get more of our kids into those programs. But the problem's not going to go away until we have a major overhaul of our immigration policy at the federal level and allow more legal immigration into our country, particularly in these skill sets. Because right now, what many people don't understand, and everybody says, "Oh, I'm all for immigration, but I want legal immigration." Well, absolutely, but all the slots are being taken up by people that have higher skills, IT skills, and others. They get reserved for those types of jobs, and the lower skilled opportunities, people are not allowed in.
I just heard a report yesterday on the news that now We don't have 10 million available jobs. Now we're up to 11,250,000 available jobs in the country.
Well, yeah, I think the pandemic has certainly created a situation where people have reevaluated their lives, right? And people in their upper 50s, who may have normally continued to work for another 5 or 10 years, have made the decision during the pandemic to not return or to. And actually, I've read that we have a huge number of new company formations, which is a good thing, but a lot of the vast majority of new startup companies fail, right?
Mm-hmm.
So, but the good news is, I mean, many people have shifted gears and maybe are starting their own business. We've seen a huge spike in that, but the workforce is very limited today for lots of industries. So we're competing, even though, and I will tell you, many of my builders will pay $25 an hour to somebody who will just show up on time. They don't have to have any skills whatsoever. If they're trainable and reliable, you can. There's a huge number of opportunities in our industry. It's just hard to find those people who are willing to roll up their sleeves and do what it takes to show up and be that
Well,
hard
the
worker.
interesting thing when you look at the housing market and trends in this country is that the millennial generation what is the number, Vic? Is it 54 million or 48?
Well, there's 5.4 million millennials, first-time homebuyers entering the market
Just
each year.
first-time homebuyers, but
Yep.
the total millennial
24 million.
So the millennial generation is massive. They're bigger than the baby boomers. And
54 million.
there are
yes.
54 million millennials that were born, I think, between 89 and, what is it? 99 or 98 or something of that nature. And the generation after them is almost that big. And nobody kind of pays attention to that. So when you look at housing, and we get people go, oh, well, when's the housing market going to implode? Like it did in 08. But you could have predicted what happened in 08 if you would have looked at the birth rate in this country in the early 1970s and fast forward 25 or 30 years.
We'll go back there because that back in 06 and 08 when everything blew up, we had plenty of homes. We had extra inventory out there.
Right.
And so it's just unbelievable. But yeah, it was very predictable.
And the challenging thing, as you had mentioned about home renovations, Bob, is that, for instance, we have loan programs that a buyer can come to us and say, we want to buy this house and fix it up. But here's the problem. In any of these loan programs, you have to get all the work done within 6 months of closing typically, which isn't going to happen right now. We're not going to easily find a licensed, insured, properly trained contractor that can come in and get this job done. And you do look, sometimes we can get the buyers in the house, but if it's a 100-year-old house in an urban area, it's going to need way too much work, if it hasn't been updated. So yes, we do need investors to buy some of these houses and improve them and then resell them again, because that, buyers in many cases are better off paying slightly more for the house and getting a turnkey livable situation.
Yeah, in fact, we've had some of our higher volume builders simply stop providing custom home type of options. They are actually building spec homes, but not in the traditional spec home sense. They're going to complete the house, then make it for sale, and let the buyer figure out whether they want to change the paint color or the very aesthetic types of things that many times right now, those products, you don't know when they're going to be delivered, right? That's one of the major problems too, is products that specialty types of orders that used to take a few days to get delivered to a building site might take months or several months.
Well, that's what we're seeing. I work with a custom builder here in South Lyon, Michigan, and they're having problems on these custom homes because they want a custom toilet or custom tile from Italy or something like that. So it's supply chain issues causing delays, causing cost overruns, and it's just becoming somewhat of it's a big problem. I don't want to say nightmare, but yeah, it's a nightmare.
Yeah, I had a client who built a house in the last year, and the whole house was done, but we couldn't close because they couldn't get the vinyl siding. I mean, every inspection was passed with the county, and the inside of the house was completely done, and we had to wait for the siding to show up so that could be installed and we could close.
Well, what's interesting is in some areas, I mentioned before we got started that I was at a meeting with all of my counterparts from around the country, and what I've learned is in some states they're actually waiving some of the certificate of occupancy requirements in order to get people in those homes. So some of those features that you're waiting for a garage door, or in fact, I think that was the example. They said they've in their state they've waived the requirement to have that garage door installed because there was a big development where everything was done except the garage doors, and they wanted to provide, they wanted to get their customers in their homes. They needed to get in those homes. So there's some things that maybe policymakers and local government even may need to be thinking differently about things to try and allow to deal with the dysfunction of the marketplace right now. But to go back to a point you were making about this is a different housing market than 08, 09. I mean, back then we were building 50,000 homes a year actually, and many of them were specs, and we had this huge inventory, and money was cheap. They were lending to anybody with no money down, and that world does not exist. And given the production capacity challenges we have, I mean, we may have a few dips here and there based on maybe an economic slowdown, but the demand, even in an economic slowdown, we are at a huge shortage of housing, and that's the biggest expense for most families. So the demand, I know our national economists, we don't see from a home builder association standpoint, we don't see the market dynamics suggesting any kind of burst of the housing marketplace like we did before. In fact, I mean, obviously we're concerned when you see 18-20% a year types of increases in appreciation and stuff in markets, and I think that is dysfunctional. But we see a continued trend up and don't see a huge burst in the market anytime. Boy, I have friends and family ask me all the time. I'm saying, yeah, my daughter just paid $20,000 more than asking. Is she going to lose all her money? I'm thinking, no,
Nope.
I mean, not over the next decade or more, we may not have that double digit appreciation every year, but we're going to see a continued growth in that because supply is just not going to be able to meet demand.
No, because this millennial generation is so huge. And the interesting thing that I've seen kind of watching the national real estate trends is that this is happening everywhere. This is happening in rural areas, urban areas, Florida, Michigan, New York, California. Well, maybe not New York. A lot of people are leaving some of those states that have too high taxes. And that's the other shift too, right? Because of COVID and because of a lot of people working remotely, I do know people that are going to leave New York and they're building homes right now in Florida because it doesn't matter where they live anymore. So why are you going to stay in a state that has terrible weather half the year and high taxes? So people
Yeah.
are becoming extremely mobile. And when you look at that and go, okay, something's going on here if it's nationwide. It's not just a pocket here, a pocket there. Or in some cases, like I've had people move back to Michigan. There are young adults that left 10 years ago because of no jobs here at the time that were from Michigan. And guess what? They're now married. They have families. They're coming back. They're leaving the West Coast, places like that, because it is more affordable here. And, they have the opportunity to become homeowners. We're out, in California, rents are $3,500 a month. So purchasing
Right.
a home is unattainable even for, strong income earners. And
Yeah, that's a $650,000 home here.
yeah, oh yeah. Yeah. They live like kings, frankly.
Hey, let's go back to the point there, Bob. You brought up about the crash, and we don't see a crash coming. We talked about the lending practices back in 2006 to 2008, where there was it was stated income. They would lend money to anybody. Well, through that crash, the lending industry has learned, well, we better underwrite tighter loans. So now we look back to 10, 11 years later, people are getting loans who are qualified, actually, which is going to drive the foreclosure rate very, very low. And if we did have an economic turn, these people are not going to let their homes go to foreclosure because there's too much appreciation. People are not stupid. They're going to take the money and sell it because the demand is there. Thus, I guess, enforcing the fact that we're not going to have a meltdown here anytime soon.
No, I don't think so. The other
right.
thing is with interest rates this low, back in '07 and '08, interest rates were 6.5 to 7.5%. We have been below 4% for the last 2 years, Vic?
Yeah.
So from an affordability standpoint, when we qualify a borrower, we're qualifying them on a payment that they can live with. Many of our borrowers are nowhere near spending 30% of their income on their housing. Even if it's a dual income family, they qualify on one income. Most of these first time homebuyers are very conservative. So you look at that and go, if we can get you in a house close to what you're paying for rent, it's a win-win situation if you're ready to settle down and become a homeowner.
Well, it's funny, Danielle, because you brought up about, they're using less than 30% of their income for their housing expense. It's actually cheaper now to buy a more expensive home than it was back in 1998.
Yeah.
So we can't let people freak out about the higher prices. It's still more affordable than it was 25 years ago.
Absolutely, but I do think that and that's what's unfortunate, and there's a lot of public policy discussion focused on equity gaps or income, just building wealth in our state, and across the country. The disadvantage of someone that's got you see many six-figure income households paying less in their mortgage payment than a struggling family with maybe a $40,000 or $50,000 annual income paying a couple $1,000s in rent. So when you look at the disparity, I mean, from a policy, it's one of the things certainly why we have a bipartisan group of members in the legislature and organizations working together on the housing issue right now. We've kind of the silver lining of this big crisis is I think we can actually work together across the aisle, which in today's political world you very rarely see. We actually had a press conference with 6 Republicans and 6 Democrats when we unveiled our housing package of bills, and all of them were just so happy to be able to cross the aisle and work with their colleagues on the other side of the aisle on an issue that really shouldn't be political at all. But it appeals to the interests of all political perspectives, and certainly those who are more concerned about people of color, minorities who have had disadvantages and so forth in our society. Closing some of those gaps, we really need to have housing is a major factor in that, because if you can't build equity, the majority of folks, when you look at your assets for a household, I mean, that housing asset over time is going to be one of the largest components of your wealth, right? Ultimately. And so I think we're at a unique, I'm a glass half full kind of guy. And while I'm very concerned about our state and the crisis that we have for housing, I'm actually optimistic that we can actually pull people together to help bring more housing production to our state.
So how does the consumer help you to help the legislation to get stuff? Do we see light at the end of the tunnel? Do we have any timing on when we're going to see some relief or some plans in place to help the consumers?
Well, like I mentioned, I mean, it's actually some communities are actually using existing traditional economic development tools to try and bring more housing at price points that people can afford. They're using things like tax increment financing, which historically has been used to pay for infrastructure related to job creation. So you have a big plant coming in, the local community says, yeah, for that area of our city, we're going to allow a portion of the taxes collected in that area to go towards paying off some bonds that are used to finance the infrastructure that is, to attract that company to come here and build that and put that investment in the community. They've used that tool right now. It's an existing tool that can actually be used to help pay for housing. A lot of people don't know that. So it's an awareness issue. I would also say one thing we haven't talked about, which NIMBYism, not in my backyard, right? There's this perception of change for your community. You allow higher density in your community, you're going to bring down the housing values of our community. If you allow, if you have a community that the average house is $400,000 or more, and you're building a development of maybe townhomes or whatever that are $250,000 or whatever, many communities look at that and say, we don't want that here. We want to keep the look and shape and feel of our community as is. And while obviously local control is something that we're not going to change in our state, but local perception and understanding of the long-term value of bringing those types of housing options to their communities. As I've told people, shoot, we had where was it? Over on the west side of the state. I think it was Sparta. There was a development that was approved by the city. They were going to build 275 to $300,000 homes, which for that community dramatically needed. A group of homeowners in the area of the development, after this was all approved, got a ballot initiative, and earlier this summer in August, they voted to stop that development in its tracks. This is a bedroom community outside of Grand Rapids.
Thinking it's going to destroy the values or decline the values of all the
Yeah.
surrounding areas.
That was their thought. But I would argue that as our demographics of our state are aging, and your community is consisting of people that look like us a little bit, late mid 50s, whatever.
29, Bob.
Your community is going to have a hard time in a few years, maybe a decade or less. As you age, you depart. People aren't going to be able to afford those higher end priced homes. Jobs are going to disappear. If people can't live near their work, for many industries, then it's going to be harder for your community to survive, and it's very short-sighted. So I think education and awareness locally, that we can't just always think, and that's actually why we stopped using the word affordable housing. We're talking, if you listen to legislators today in Michigan talking about housing, they're talking about attainable homes for the typical citizen of our state. Because in that context, then when you're talking locally about creating greater attainability, there's not this perception that, affordable housing. People have this disparaging view of when you start talking about affordable housing, they think it's subsidized individuals, maybe without jobs, very low income jobs. And that's not what we're talking about. We need a huge infusion of attainable housing in our state. And it's really going to require a mass effort and awareness building. That's why we're actually working with a lot of economic development groups around the state to change the mindset and to get people talking about the fact that, we need to attract attainable housing. We don't just need to attract the next Amazon plant or whatever warehouse to come. We need to be thinking about how to attract housing, because if we don't do that, we won't be able to attract and keep the jobs that we have in our community.
Wow. I was just thinking, I just kind of went off on a tangent there, but I'm just thinking, boy, it'd be great if the state took ownership in that house with that person trying to get attainable housing, kind of a kickstart program, and at some time they're weaned off there, where the state actually helps out. But I'm just throwing that way out there. That's just the idea.
Well,
but
there are some programs. I mean, there's MSHA.
Yeah.
There is the Rural Development Direct program. So in some areas, there are, I think, and especially in the urban areas, I think there's a lack of financial education for young adults. Some high school students will take, economics classes or something like that in high school, but there's nothing that all students take that teach them how to balance a checkbook, how to use credit properly. How to use a bank card or a credit card, things of that nature. And there's a thirst for education with this millennial generation, but they don't always find what they're looking for on the internet.
Absolutely. And with prices keep going up again, it's just, it's about that attainability, affordability, because a lot of these younger people have to utilize maybe that government financing. And like Bob said, you can't get offers accepted like that because there's so many people making an offer on that.
Well, yeah, absolutely. Our state housing authority has put together a housing advisory group. I'm on that, as are a number of folks from different segments of the housing sector and the nonprofit housing sector. And as I point out to them, all those great programs that were created that you guys have been trying to manage and facilitate, and I probably offended a few people. I said, right now don't mean squat
Right.
because they can't be levers at all. And in fact, the biggest argument as we talk about a plan for our state, there's people that want to segment some of the resources towards particular types of populations, senior housing, et cetera. And the thing I've been advocating for is let's invest as much as possible in attracting housing investment that, let's say, 80 to 100 per 20% of area median income. Let's target housing that population can move into, because what we have right now is a ripple effect. Somebody that, instead of building new, buys a fixer upper, is taking a home away from that family, that first time home buyer or whatever. That first time home buyer is stuck in a rental situation in a house or an apartment or whatever that's probably pretty decent, but they're then stuck in that and taking that opportunity for housing away from somebody that's at a different level, right? And it's just a ripple effect that we have right now. So if we can build more homes across the state in that missing middle, it's going to relieve the pressure at those lower points, because, and I think from a policy perspective, that should be our focus right now. I mean, it's probably more inside baseball than you care to know, but that's kind of some of the discussions that are going on right now, is how can you flip kind of the traditional MSHA, Michigan State Housing Development Authority model, that's historically used some tax financing programs and so forth to build affordable housing. How can you flip some of those models and say, let's use some of those same programs and tools and dollars to invest in that middle? And many
Attainable
people,
housing.
yeah, attainable. And many people are having a hard time putting their, and I used to work in state government, so I don't want to be disparaging to government workers, but once you get into a pattern of doing things the way you've always done them, it's kind of hard to pull, not just in government, in any sector, it's hard to push people outside of that comfort zone and say, let's rethink how we do things so that we can design these programs and make them work for that missing middle housing. And let's partner with those in the private sector to make that happen. And I think that's the most important thing right now, and over the next probably 3 to 5 years, that we need to do in Michigan. We need to somehow get all of our programs focused on that missing middle, because I think that will create the most relief in a very dysfunctional housing marketplace.
Well, when you talk about MSHA, for instance, has a purchase price limit of $224,000.
Yeah.
That has never changed in the last 10 years that I can recall. And now even in the urban areas, you look at that and go,
that's going to get you a
right.
Cracker Jack box.
The scope of what MSHA can serve is shrinking dramatically.
Right.
Because the program is not staying up to date. It's not relevant. It's not staying relevant in the market.
And I believe most of their programs also limited the occupants had to have, annual income that wasn't, I think, more than like 80% of AMI.
Yeah.
That's the good news, is they're now talking about, and some of their efforts are actually allowing up to 120% of AMI,
Right.
which
in
gets
certain
you
zip codes.
Zip codes, yeah.
which gets you closer to that, $90,000 to $100,000 household income number for many areas. So that's somewhat of a good move, but they need to do more for sure. And I'm hopeful and that things will change. It's just in the meantime, you have people get discouraged and probably give up in that housing marketplace looking for a house, right? My kids have been fortunate to have had the ability, with some additional, maybe some help from parents, to put money down and compete and actually offer over asking price to compete. But there's just so many people, if you look at you guys follow it, you look at the data, people looking for a house, I believe, I mean, the number is huge, where it's been 6 months or longer and they've lost out on multiple opportunities where they made a bid, they didn't succeed, and you get frustrated, right? You get that frustration, you know, is a problem, and people then start looking to more remote areas. They might start thinking about leaving the state. They may, I think the concern, for many of us who have either young or adult children or whatever that want them to maybe live in Michigan or come back to Michigan, I do think that is a challenge right now. And while we don't want to become San Francisco or, some of the areas around the country that have just crazy housing markets, in many ways, some of our communities across the state are starting to resemble some of those places we used to point to and say, "Oh my gosh, we can't ever be like that."
Yeah, we've
Um,
seen I've seen multiple buyers in the past year and a half. One of them particularly was in the Grand Rapids quarter, which is just a hot area. He tried multiple times to get an offer accepted, and then his parents honestly were able to borrow him the cash to make a cash offer, get the house under contract, and then we did a mortgage immediately and paid his parents back. But you go, well, most people can't do that.
Right.
Right.
And you go, how do you compete in that market when there's,
I had
so much competition?
I had a client offered $50,000 over, waived home inspection, $50,000 over, waive inspection, paid cash, and he got turned down. He got outbid. My God! So he threw in the towel. And I thought,
Yeah.
wow,
Yeah.
But
Well,
go ahead.
I mean, that is actually that kind of environment. With that kind of environment under a normal, and well, if we ever anybody can remember a normal housing environment, um, production should respond. I mean,
Absorb
with that
that. Yeah.
kind of demand, an industry should respond. And so you would say, why isn't it? And I think as people start to peel the onion and look at all the factors, because unfortunately, it's not a simple answer in terms of how you fix it, right? There's multiple facets, as we've been talking about, that impact the industry. So I wish we had a one size fits all solution for our housing challenges. But I think clearly what you've just described would tell any logical person that we've got a problem, because why isn't supply meeting that kind of crazy demand?
Right.
Um,
And you hope that
and
these communities, like you had mentioned, Sparta, putting under a 300 unit housing development. I mean, think about how much building we saw in this country in the 50s, the 60s, even into the 70s. We didn't see, home building slow down until what, the 80s? The mid 80s, if I recall, didn't have a lot of building, due to the recession at that point in time. And then the 90s and the 2000s exploded again.
And then in the 80s, rates hit in 1981. They were at 18%. So
Yeah, we're not dealing with that.
Right.
3% is cheap.
So anyway, as we wrap up the show, Bob, what's some good news or what's a couple good bullet points you could put to our consumers and our realtors and our local builders out there? What's the silver lining?
well, I think the silver lining is we're going to see a much more, not in every community, but I think we're going to see a much more friendly environment for building and development, which is a silver lining for folks who have always struggled. There used to always be an adversarial kind of relationship there. The builder developer wanting to do X, the community saying, well, we'll let you do X if you do Y. That whole negotiation, adversarial type of situation, I think it has gone away in many communities, and we're looking at partnerships, which is a very positive change and something I'm feeling positive about. I would also say that I see some, particularly after coming back from some national meetings, I do see some light at the end of the tunnel on supply chain issues related to the industry. And we've got a little hiccup now, even with lumber again in Canada. The Biden administration has doubled tariffs on lumber, unbelievably. We've got some little hiccups there, but I think long term here over the next year, towards the end of next year, we're going to see some relief on supply chain where we can get back to predictability. I mean, I think the thing right now, since the pandemic hit, we have this huge demand and people are busier than ever, but they're chasing their tail because supply chain issues that have really emerged because of the pandemic, those need to go away in order for us to get back to more predictability in the marketplace. And that will benefit consumers. They're having to be really patient right now. And I think the thing we've been trying to work with our members on is just educate, communicate with your customers, because it's so unpredictable. And so those things are going to get better. And I think, again, the policy changes that will emerge as a result of this crisis long term are going to be better for the industry across the board, not just for builders and developers, but for the lending industry, the realtor community, and so forth. Things are going to get better from a policy perspective as a result of this. Now, yeah, I mean, I think those are a couple of the key silver linings to take away at this point. And hopefully we don't get, I mean, the one thing we haven't talked about today that is a concern is there is a big movement to electrify everything in the house in our society, and housing is being targeted for that. And so we talked about regulatory costs and so forth. We're looking at some potential changes in our state code, building code, that are going to, unfortunately, dramatically increase the cost of building a new house. If you're going to require that all homes be ready for everything to flip to electric, there's a big cost to that. If you're going to require every house to have the capability to have an electric vehicle charging station in it, there's going to be an extreme cost to that. So the good news is we're working with people in the affordable housing community and others to try and minimize those requirements. But I think, we've got to keep reminding people that getting people into new or to better housing is good for our economy. It's good for our environment. I mean, you think of all the dilapidated housing that many people are in this state and how much energy is wasted in those homes. So I think, I'm optimistic, but I'm also concerned about some of the trends. And if we just got to keep reminding people that housing attainability is impacted by a host of factors, including any mandates that say you've got to do certain things before the environment's even ready to do it. I mean, our electric grid does not have the capability to only provide electricity for all the energy needs of our state.
Right. Wow. Yeah, that's a rabbit hole I didn't think about going down today.
No.
No, we don't need to go down that. But I will tell you, it is going to impact housing attainability. If the state moves in the direction that they could, I think we have enough voices at the table, again, on a bipartisan basis, to say, look, there's many of other areas we can target to meet our shift away from fossil fuels. Housing affordability, housing attainability, you can't, we're making progress. We can't, cut the knees out from underneath that progress by imposing all these new rules for new construction.
Let's get the houses built, and then we'll figure out how we'll electrify them all. Yeah, but let's get people in houses.
Yeah.
Yes.
Well, again, you look at the lower, that entry buyer, they're probably not buying $100,000 Teslas, right? So they're not going to be worried about where to plug in your car.
Right.
Or range anxiety. That's a whole nother
conversation. They just want a roof over their head, man, to get started.
Exactly.
Yeah.
But hey, we got to wrap up the show here. And Danielle, do you have any closing words for our guest here?
Well, we appreciate you coming on today, Bob. I think this is a great topic and so many things to think about that, we don't hear about the Home Builder Association very frequently in the media. For those of us that are, people that are not in the real estate or building market, we just don't hear much about this unless there's some, public outcry for not wanting something in a community. And there's a lot of that. There's even a lot of that in Livingston County right now.
Well, I tell you, I got a lot more educated today with you, Bob, and we'd love to have you as a guest. Maybe, every half a year or so, just to bring some of that data so we can get to the consumers and get you some support and let us know what we can do to help you out.
I appreciate that. I appreciate your time today.
Okay. Well, everybody, that was our episode of A Smarter Way Home. We'll see you next week. And that was Mr. Bob Filka. He is the CEO of the Home Builders Association of Michigan. And we'll see you next time. Thank you very much.